Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. Monday morning, July the 28th. Good morning. Thanks for joining us. Hope you had a wonderful weekend. It's very hot yet, at least for the next couple days, and then it starts to cool off and will be more moderate for at least the first 5 days of August, as that's what our forecasts are showing. Let's look at our overnight markets here, then we'll talk about the news and fundamentals driving our markets today, what we can expect. I'll be doing RFD TV this morning, 8:15 Central Time. Hope you have a chance to tune in for that appearance. Dollar's stronger here this morning, up almost half percentage point, with crude oil over $1 stronger and nat gas virtually unchanged. Stock market is stronger here as President Trump announced a historic trade agreement with the European Union. That bullish agreement gapped the S&P futures higher overnight, and we've been maintaining that strength stronger into the morning hours. Corn down 2, beans off 6 1/4, meal down again, while oats are up 3 1/2, and wheat is down 3 to almost 5 cents in Chicago, Kansas City in our night session. So as far as news, this is a huge weekend coming out of Friday's reports and all kinds of other news. We mentioned the EU trade agreement with President Trump has worked out. All kinds of information. Follow us on Twitter, Midwest Markets, Brian Hoops, and sign up for our daily newsletter. Receive all this information sent directly to you. Now, we have more information in our newsletter than what we'll be posting here, but we'll talk briefly about it this morning, and I'll talk about it all on RFD TV at 8:15 this morning. And let's get into what's happening overnight. So first of all, a check of our weather. 6, 10-day and the 18 to 14-day forecast, they look for moderate temperatures, normal to above normal precip for most of the Corn Belt. This is a real bearish forecast, really good for corn fill and for soybean reproduction, as soybeans are a crop of August, and August looks like be a much cooler month than what it was the last couple weeks of July. So weather-wise, couldn't ask for much better yield forecasts for corn and soybeans. First notice day for August grain futures is coming up here this Thursday. So by Wednesday, you will need to be out of those positions if you are long. I guess that includes August gold, not just grains, but any August futures contracts. So over the weekend, one of the bearish news and items was Argentine president announced a permanent reduction in their agricultural export taxes. That makes their products that they're selling more competitive on the world marketplace because taxes that the exporters will pay are cheaper. And this is potential drop of about 2.5% on corn exports. Wheat remains at 9.5%. Soybean is the biggest one, dropping from 33 to 26%, and meal and oil also from 31 to 24.5%. Those are some big drops, and should ensure Argentina remains very price competitive in the world export marketplace. So that news is a little bearish here for the grain markets, and weather is bearish for the grain markets as well. In the livestock, there's a host of reports coming out on Friday. Cash cattle trade, first of all, stronger than expected. On a dress basis, $2 to $5 higher than the prior week. Live trade was $242, $245, $380 dress. All that was $2 to $5 better than the week that was a week ago. And in the South, we saw $230, $232, so steady to at least $1, maybe $2 better than the prior week. Cash trade better than expected. And in the box beef markets, cutouts were down. Choice was down over $5. Select was down almost $7. That continues to hurt packer margins. And we're probably looking at stronger cash trade to be, ideas for this week. The cattle and feed report, it's going to be considered bullish. On-feed supplies fell to an 8-year low. Placements came in below expectations and at a 16-year low. So on feed at 98.4%, below estimates, down slightly from last month. Placements 92.1, again below expectations. Very similar to last month's figure, but a big drop compared to what we expected. We really should see some strength in some of those deferred contracts off of this. And markings at 95.6, slightly below estimates, although it was better than a month ago. But really the highlight here is 8-year low in on-feed supplies, 16-year low in placements. Should be pretty friendly, I think, for the cattle on the opening this morning. Other news, we had the semi-annual cattle inventory report. It showed total of cattle and calves inventory the lowest in 70 years. Cold storage report came out Friday afternoon as well. Total pounds of beef in freezers are down 3 from last month. 1% on the year. Pork supplies down 6% on the month, 11% from last year. So overall, this looks to be a very healthy report for beef and pork production. We're going to, I think, see some stronger openings here once we get started at 8:30. And the livestock grains remain under some selling pressure here because of good growing conditions and the EU announcement of their increase of export taxes. All right, I'm going to sign off here and get ready for TV. Have a great day, everyone. Good luck. And as always, reach out to us. Be glad to talk markets with you. This has been Brian Hoops.